Hello, TrendSpider users, and welcome back to this last and final session in the GoNoGo educational web series. My name is Tyler Wood. I'm a CMT charter holder, and I'm joined by Alex Cole, our Chief of Charts. How are you doing, my friend?
I'm doing very well, thanks. I'm excited for this one, putting it all together at the end.
This is the idea. We bring everything that we've learned into the context of how you would actually trade using GoNoGo Charts. Now, to start today's session, I just wanted to mention this quote from John Henry. If you've read the book or seen the movie Moneyball, you know that he was instrumental in equipping the Boston Red Sox with that idea of statistically derived player selection, right? We know from his humble beginnings on a soybean farm in Southern Illinois, he learned the commodities trade, and his quote that if you take emotion, the would be, could be, should be, out of your process and look at what is, actually quantify it, you have a big advantage over most human beings. So we've discussed a lot about removing behavior and subjectivity. We've talked about the trading discipline of letting winners run and cutting losers short, that is inextricably difficult for most human beings because we're not wired to do that. So we want to use our tools to our advantage. And we've talked about this problem in every single video. The idea that there are all these powerful indicators out there, tremendous information that we can glean from the markets themselves. But if we add them all to our chart, we can introduce indicator overload and analysis paralysis. So what we've discussed in this 6-part series is the idea of a complete chart that gathers the entire technical picture of any security over any time frame in a liquid market and gives us an idea of trend, momentum, volume, and volatility. Now, the interplay between momentum and trend was a big component. We talked about volatility compression in our last video. But what we wanted to do in this final session was just comment on how simple your trading decisions can be with a simplified data visualization to bring that information to bear. So, Alex, talk to us about the 3 things that we need to consider to keep our trading decisions simple.
So when we look at a go-no-go chart, we believe that there are really only 3 things to consider. Where's the trend? Are we in a go trend? Are we in a no-go trend? Is it strong? Is it weak? Where's the oscillator? Remember, the oscillator includes volume. So where's the oscillator? Is it positive? Is it negative? Is volume heavy or is volume not heavy? And then the third question, and perhaps the most powerful piece of this, is there anything interesting happening around that zero line? And remember, that will incorporate the squeeze if it's there. So if we can answer those 3 questions, if we can understand those 3 talking points, then we can have a competent understanding of the technical analysis of any chart that we're looking in. And that was super important to me working with clients in the industry, being able to break down the technical analysis that we're seeing on the chart and be able to explain it to an oil trader, to a long-only mutual fund, to a foreign exchange rates trader, and being able to have a complete technical view without making things complicated. Very, very important. And we're going to walk through how we can do that just by understanding these 3 things. So let's take the first chart. This is a chart of NVIDIA, and let's go through our 3 simple questions. And when we do webinars, we like to say, play along at home, right? Certainly can in this case because it's a video. But what is the trend? What do we know about the trend from looking at this chart? Well, we know it's a go trend. We can see that it is an aqua color. So that tells us that there is some weakness. So we're in a weak go trend. Where is the oscillator? The oscillator is at the zero line and volume is heavy. The oscillator is that darker blue color. So our third and final question, is there anything interesting happening around the zero line? Absolutely. We are tagging that zero line from above, where we will look to see if we can find support. Remember, given that we are in a go trend, the weight of the evidence tells us that the trend is still in place. We would expect momentum to surge back in the direction of the trend, all else being equal. So we will look to see whether or not the oscillator can indeed find support at the zero line. If we move on to another example. Now, this is a chart of Apple. We've brought in a little bit more data. This is, still a daily chart, but looking at a larger set of data. And let's go through it again. What is the trend? And if we turn our eye to that top right portion of the chart, we can see that we are in a go trend. Now, again, the trend here is a weak go. We can see a little bit of weakness because of the aqua color. Interestingly, we can see that icon there, that red arrow telling us that we are in a counter trend correction. So the weakness makes sense. A slightly weaker go trend as price consolidates and pulls back slightly against the trend. But remember, the weight of the evidence tells us we are still in a go trend. What's question number 2? Where's the oscillator? Well, the oscillator here is at a value of 1. It is positive, but you can see that we are trending downward on the oscillator. So final question, is there anything interesting happening around the zero line? Well, the oscillator is moving sharply, fast approaching the zero line, where again, we will look to see if it finds support. So when we put these three things together, we know we're in a go trend, but seeing some weakness. Momentum is positive, but fast approaching the zero line, and we will look for any support that can be found at that level to tell us whether or not the trend is likely to continue. Remember, in both of these cases, if we do find that support at the zero line, what will we see? We'll see a trend continuation icon that tells us that it's okay. It's a relatively low risk opportunity to enter the trend that's already in place.
And Alex, the one other thing that I would point out on a chart like this, where we could see price action very clearly, we can note how we are approaching this prior resistance level and stalling out a little bit at that resistance, right? The trend weakened as we are testing this area of resistance. Now, before Apple can make a run at its all-time highs, we'd have to break through this resistance level. And it's very easy to do annotations on your chart to show those important areas of support and resistance or trend lines when you've got a simplified process on your visual.
That's a great point. The ability to combine traditional technical analysis with the GoNoGo charts is very, very powerful. And you can easily see those market dynamics on the chart, the support levels, resistance levels, trend lines. That's a great point, Tyler. And then this next example here, what are we looking at here? We're looking at Carvana. And let's go through those questions again. What's the trend? Well, this is a different situation. We're seeing a strong no-go trend here. The no-go trend has been in place for some time. We're seeing strong purple bars. What's the oscillator value? The oscillator is currently at 0. And that's very, very important because we can see, what can we see happening around that zero line? A building go-no-go squeeze, which is currently at its max. So as the oscillator has stayed at 0, that tells us we've had reduced volatility compression, very little directional momentum. And so the no-go trend that's in place, if you highlight that again, exactly just like that, we can see how small those bars have become on that right side of the chart. You see how very, very little price volatility, very little movement in the price as the price has gone mostly sideways. So we are in a no-go trend. Weight of the evidence still tells us strong no-go trend, but max go-no-go squeeze showing volatility compression. Now, if this no-go trend is to remain healthy, then we will expect what? We'll expect the squeeze to be broken into negative territory. And that will then tell us we're looking at trend continuation. We'll see the price move lower as momentum builds in the direction of the trend. Of course, we've seen in previous videos that the squeeze can happen at reversal points as well. So we would watch if the squeeze is broken into positive territory, that's a real threat now to the no-go trend that's in place. But again, run it through simply. Question 1, what's the trend on Carvana? Carvana is in a no-go trend and it's painting strong purple bars. The oscillator is at 0 where it's been stuck as we've had little directional momentum, which has allowed a go-no-go squeeze to build to its max. We'll watch for that breakout because we know that from periods of low volatility can come periods of high volatility. So we're looking for a move out of that squeeze. So there's a few examples of just walking through those 3 steps and understanding what we are seeing on the chart. And this
now,
is
Alex, everybody who we've ever talked to has been looking for a silver bullet in technical analysis, and figured this chart of Molson Coors might provide that exact silver bullet that folks were looking for. Shout it out at home. What are we seeing on this chart, right? We have a weak go trend. It's a fresh go. It's been in a downward sloping no-go trend, pink and purple bars all the way through this season. And we are just now entering a new trend. Where's the oscillator at? Well, we're at +5. And what do we see happening at the zero line? Well, nothing. We're in an overbought territory, well above zero, waiting to see volume strengthen as this trend gets going. So we've talked a lot about trading discipline. We've talked about these individual security charts, but you can use GoNoGo charts as well in your overall analysis. Alex and I write institutional research every week. We have a group of professional subscribers. And one of the core things that they're looking at when using technical analysis is not just absolute trends, but also relative strength, the trend of one security versus another. So I threw this quote in here from Martin Pring. He's a widely cited author in the CMT program. For those of you going through those textbooks, you're reading a lot of Martin Pring right now, I'm sure. But the concept is to simply compare what's going on between two asset classes, two securities, a sector against this index, you name it. So let's just talk through what this looks like in practice. Well, if we were to pull up two charts, let's say we're an institutional investor and we just want to look at factors, right? How is growth doing relative to value? Well, putting two charts side by side doesn't really help us. If we're eyeballing these two charts, obviously through 2019, coming up before the COVID crash, they were both rising, they both fell, and they both recovered. Maybe we could see some divergence between growth and value as these charts headed into 2022. But what relative strength does is it gives us a division of those two, and so we can compare their relative price performance. Now, this bottom line is our relative strength line, and that's really powerful to look at relative strength. When it's a rising line, we're seeing growth outperforming value. Interesting to note, growth began to outperform value ahead of the COVID collapse, right? The market knows way more than we ever possibly could and predicted that stay-at-home trade well before we even saw the indexes collapse. But we can also see that when the line begins to slope down, value is outperforming growth. We see a strong correlation between the rising interest rates and that outperformance of value shares versus growth. But now what if we applied the GoNoGo trend concepts to that relative strength line? What if we were looking at the trend of relative performance to give us an edge in looking for trade ideas within those sectors of the market that are outperforming? So Alex, let's do a couple of examples together, just using some GoNoGo charts on the ratio charts. And remember, in TrendSpider, it's just an equal sign, one security ticker divided by the other.
Yeah. And let's go through the three questions. Let's not forget how we can turn this into a simple three-step approach. This is the chart of technology to utilities. So we're looking at that relative ratio of technology to utilities on a weekly time frame. So you can see, we know that the growth sectors have been generally outperforming, especially technology, for some time. And you can see that reflected here. What's the trend? The trend is a strong go. We're seeing those bright blue bars. And we see that we've been in a go trend since the middle of the chart. Where's the oscillator? The oscillator's at a value of 3, right in the middle of positive territory, not overbought, but also moving away from the zero line. Third question, though, is there anything interesting to report happening around the zero line? Not at this current moment, but I would say if you start to read these charts and you start to get familiar with them, what I'm seeing here is that time after time after time through this chart, the oscillator's finding support at the zero line. So a robust go trend in the ratio of technology to utilities.
And so we're just using two ETF proxies, the XLK over the XLU. But looking at a chart like this, you can see that it is a risk-on environment. Investors are not piling into utilities companies in fear of a bearish condition for the overall markets. Instead, XLK, the technology sector, is outperforming. Let's do one more. This time we'll switch it over to a daily view. For a lot of the registered investment advisors and the portfolio managers that we work with, they're looking at tactical asset allocation. They're looking at each of the sectors of the market against the benchmark index. Most of those investment advisors and portfolio managers are measured, or they're evaluated on how well they can beat the benchmark. So by definition, you have to own the things that are beating the benchmark. So that ratio of those sectors and the industry groups relative to the S&P 500, their benchmark, is very, very important. Alex, let's do the three questions. On this ratio of the energy sector versus the S&P 500, right now we are in a weak no-go trend on a daily chart. Where's the oscillator at? We are at the zero line, testing it from below. Is there anything important happening? Well, absolutely. if this is bottoming, right, if this is a bottoming process and we start to see momentum move into positive territory, enthusiastic buying of energy versus the S&P 500, relative outperformance, that would be a clear signal that this no-go trend may be coming to an end, right? Momentum leads price. And so we're looking to that forward-looking indicator to see if there is a break above the zero line. If not, if it's rejected here at zero, continues to turn down, we're going to likely see price follow, and a continuation icon will appear on that chart telling us that indeed energy will be underperforming the S&P 500 index. Alex, let's do one more. And for everybody on TrendSpider, if you just wanted to evaluate two individual securities, right? They both look good to you. Which one do you want to own? Let's take a look at Microsoft versus Apple.
Especially in a situation like this where you're talking about two securities in similar industries, the whole concept of pairs trading becomes very important. Well, which one perhaps would you want to allocate to? This is a weekly chart of Microsoft to Apple. And you can see that even though Apple is the one probably that gets the headlines, Apple's probably the one that you see in your word bubbles and all the rest of it. And you're going to see Apple being talked about probably more on Twitter and X, I should say, and all the rest. But actually, we can see that Microsoft has been in a relative go trend on a weekly basis for several months. And you can see right now, where are we? We are in a go trend, but we've just painted a weaker aqua bar. Where's the oscillator? The oscillator is at a value of 2, so positive, but no longer overbought. And is there anything happening around the zero line? Again, not at this moment. But if you look back, look how the oscillator struggled to get away from that zero line for some time as price went sideways. And then, of course, when it did, we saw that pop in price. So we're seeing relative strength in Microsoft over Apple on a weekly basis.
Absolutely. As always, we look forward to hearing from you on what you're trading, what your time frame is, how these GoNoGo charts are working for you. Feel free to reach out to us anytime. info@GoNoGoCharts.com. And until we meet again, take care of each other and trade them well.